All right, welcome back to the Best of US Platinum Swing Trading review channel. Today, we're going to hit upon our watch list, horizon list, and our 200-day moving average list. This is part of the Platinum Swing Trading subscription. And today, Mark is going to take us with a review on the winners and on the opportunities that we see coming this week.
Okay. So, how you guys doing today? Good.
We're good.
I'm glad.
Yes.
Let's get into it. We basically before market open, we have a couple watch lists that we put out. One is the horizons list. One is the under 200 list, which means that stocks that are traded under the 200 simple moving average, but have a lot of the qualities that are in our trading plan. The horizons list are stocks that don't quite meet all the parameters of our guidelines, but they're getting close. So it's like these are the stocks sitting on the bench and ready to get in the game. And then we also provide some list of our um, paper trading portfolio. Again, it's not financial advice, but these are stocks that usually meet guidelines, trading guidelines, and we show you when they would get on the list based on meeting their guidelines. And then we also provide, reviews of those daily and how they're doing and when the signals would tell you to get out of a stock like that. And again, this is just for educational purposes. We're just showing you about how we look at swing trading and how it can help you increase your probability of success. Of course, nothing is guaranteed, but anything that we can do to help is what we want to do. It's for educational purposes. So let's go take a look at just our watch list and what happened last week. So this is our paper trading portfolio. Again, this is just a learning tool that we have that shows how we use our trading guidelines when a stock comes on the list, which basically would meet the majority of our or all of our guidelines, trading guidelines. You can see when it comes on, what price is today, when we got on. Here's the date we got on. Here's the day we got out, the price we got out. Here's what percentage increase we would have, how many days we've been in, some verbiage on why we got in or why we got out. Here's our wins and our losses. And we do have some losses, but what we want to do is minimize the losses and maximize the gains, okay? And that's how we get to where we are in June. We're up about $2,400 on a paper trade portfolio. For the year end, we're up about $17,500. And again, this is just for learning. We're in Abbott Labs and we're in Philip Morris at this point. You can see right now on Abbott Labs, we're up about $3.13 and on per share. And on Philip Morris, we're up about 85 cents. We assume we trade 100 share lots. And you can see when we get out what we win or what we lose. Let's go take a look at Abbott Labs. Okay, so here's Abbott Labs, okay, ABT. We got in right back here at this point. You can see that price action was in a dumpster fire here underneath the 9. On this date, we came up and we closed a little bit above the 200 at this point, but we didn't get a full candle above. On the next day, we got a full candle above the 9, and we got in on this right here is what got on the watch list, on the paper trade watch list where this white line is. And you can see we came up, we closed right on resistance, which was the 50. The next day, we wicked down a little bit, still having resistance on the 50. The following day, we popped up above resistance and came up to basically where we find a lot of stop limits on sells. We went sideways for a while, still above the 9, still above the 50, where we find support on the 9. And then we ended up Friday wicking down just a little bit to support, but we crossed over our sell limit, and we see the Bollinger Band still going up. Here's our intermediate term resistance line up here. So we're still moving up. We're still in this trade, and we're up quite a bit on this. You could have gotten out at any of these resistance lines if you wanted to, and for a small profit, or you could do half of a trade out, or you could keep in like we did on this one, because I'm seeing still strength here. We're seeing MACD still strength. We're seeing the RSI is up, and we're seeing the stochastic up. So this has been a green light on Abbott Lab. Even though we moved sideways, we were still above major support and we had a nice little trend up on the Bollinger Band.
Cool. So we still got a little room above where it is today, and have some opportunity to make a move. It looks like from 109.02 up towards 110.58 kind of range.
Yeah, I mean this is where you get into a point where you're saying, okay, what's the upside versus the downside? So
Right.
the downside is either the 9 or right here where we have passed through the stops, and then our upside is up here at this resistance level up here.
Gotcha.
So
So
what
at
we're looking for this, this dumpster fire over here where we have a lot of problems as far
yeah,
as price action going down. You can see the Bollinger Band, it's following that down. You can see the 9 following that down. Then we level off, and then we start seeing an uptrend, and we wait until we get past certain resistance levels and follow our trading plan, and that's where we get the highest probability of success.
awesome.
So
Let's
Mark, I
go
think a
look.
lot of people, I think a
Go
lot,
ahead.
so okay. So Mark, I think a lot of people when they get in the trade and they see their gains going up, anyone gets excited. That's swing trading, right? And then I think the worst scenario is when they go up, 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 and then they're expecting something and the stock tanks and
Yep.
you're in a loss. That's the
Yep.
worst position you want to be as a trader, not
Right.
not as a long-time investor. So in this case, I do hear that you're saying that based on your indicators, there's a more upside potential. But based on your guidelines, where would you put your stop loss based on this graph so that people have an idea?
Well, I think at this point, where we closed at 109.02, I would probably, you're bouncing off the 9 here, which is a good level of support. So, and here's where our cost basis is. So you've already got a good profit going. If you wanted to put a stop loss or limit underneath, I would put it just underneath the 9. And if it hit, you're on house money right now.
Mm-hmm.
You could do a half a position or you could do a full position on the bottom. On the top side, you got all the way up to the green line and basically our Bollinger Band up here. So you could put it just underneath that, because everything that we're looking at here, everybody's looking at. These are not secret lines. These are lines that everybody sees. These are lines that people trade off of. These are lines that the institutions trade off. The 200, the 50, the 20, and the 9. Some people trade the 10. Some people trade the 5. It just depends on what you're doing. And then we come down and we look for confirmation in the oscillators like the MACD, the RSI, or the Scholastic. And these are things we talk about on the Platinum channel, especially during our Zoom calls every Friday.
So one more
Awesome.
thing is then that's a great point, I think. But do you set up the stop loss usually on the support that's right under the price, or do you usually follow like the 9 SMA?
Well, I mean, you look at where support's going to be, and support right here on this particular trade is for me at the 9-day SMA, and we're trading on the daily chart, okay? Because people have things to do, so you can't sit and watch your charts all day. You set them and you let them go. But right now we're looking at support at the 9. You can see here we went down below the 9. We actually went down below the 50 on this particular trade. It actually opened up down here and ended up above the 9. So I like to wait, until you get a full candle close below the 9. Plus you look at your oscillators. But in this case, we came up, closed above, and the next day we came down, hit support again, and then we closed up above what was kind of a resistance line. And now it kind of gives us the green light that's going to go up higher. Now, this could open up Monday. We have a half a day of trading. Volume could be low. This could open up lower and go lower. I don't know. But if you have the stops in, you're going to be fine because you're already up, from here to here as far as your profits on this trade.
Awesome. Good analysis of this. So as we go into a short week, this may be put a tight stop loss in, protect what you got, the profits that you have,
Right.
and not get called out because of low volume, short day on Monday, and
Yep.
walk into a potential storm on Wednesday.
Right.
Cool.
A lot of people get out of trades that swing trade, before every Friday. They don't want to be long over the weekend, especially like this week. We're over the 4th of July weekend, half a day trading on Monday and no trading on Tuesday. So it's pretty much, 4 or 5 days off.
Yeah.
In this particular case, just looking at the charts, we're already up on both those positions. Why not stay in? We can put in stops. The only issue would be is if the market opened up really down on Monday or Wednesday, and it opened up below where our stops would have been. You got to be careful of that also. Let's go look at one more thing.
All right.
And we'll look at the horizons list. Let me put this up. This is a bunch of stocks. These are the ones that are on the sideline. And for this week, we didn't quite have 10. In fact, we only had 4 on the horizons list, but they were pretty good this week. And you can't push the market. You got to let the market come to you. And that's why we only had 4. We had Casey's, Merck, the healthcare Spider ETF, Charter Communications. Casey's here did pretty well. And again, this was a pricey stock because it's in the 200s. When we put it on the list, it was at 224, and you can see our comments, but it's up $19 a share. And if you look at Charter Communications, it's a pricey stock at 359 when we put it on the list, and it's up 798. Let's just look at Casey's because it's an interesting stock. So here's Casey, and this is the kind of position you want. It's just humming along. We have a dumpster fire here because here's earnings. Again, look what happened at earnings. Boom. We always want to try to I always get out before earnings because this is what happens. Not always. Sometimes it pops up, but I know earnings is there and it went down. So we watch it. We're under the 200 now. We're under the 9. You see it goes sideways. And that's what we're looking for. And all of a sudden we have a little bit of a close, but not a full candle close above the 9. On this day, we closed a full candle above the 9, but we're still just a little above the 200. Here's where we got in because we had a candle above. Put it on the watch list. Candle above the 9, candle above the 200. The next day, I went down, closed right on the support level of the 200, and the next day it just took off. You can see we came all the way up to the resistance line. We wicked above it. These lines are like battle lines between the bulls and the bear. We had a nice move up here, and at this point, we don't really trade off this list. You can if you want, but learning the system, you'd say, okay, here's resistance. I'm above the Bollinger Band on these 3 days. It's probably going to come back down. Probability that it would. So a lot of people would have gotten out here because of the resistance line. And these resistance lines, these intermediate resistance lines, are tough to get across. But you take your $20 profit right here or half of it and let it ride. But we're from here where it went on the list all the way up to the resistance line. So that was a pretty good trade for us. And the other one that we'll look at real quick. So on this chart, you can see, we were moving sideways, and all of a sudden price action starts rolling up. Here's our 9, which triggered me to watch this. The next day, we not only crossed over and closed above the 9, we had a huge gain between the 50 and the 200, 50 being support, the 200 being resistance. The next day, we crossed over the 50 or over the 200. And that's about when we put it on the list. You can see right here, this is where it went on the list and it closed up, and then we gapped up a little more. We've got a nice Bollinger Band. We're following straight up the side. We've got short-term SMAs trending up. We've also seen our MACD take off. We've got a nice RSI, and we're seeing the stochastic still up. So this was a good trade. We've got some room on the upside here. So Charter came on, and it has done well just on our horizons list. This one here now could be actually put on our paper trade portfolio at this point. It meets all the trading guidelines. And again, we use trading guidelines to take the emotion out of our trades, to when to get in and when to get out. And it's a hard thing to do. Once you're in a stock, you want to root for the home team. You never want it to lose, so you never want to get out, even when they have a losing season. But in stocks and in trading, you got to get out, preserve your gains, and reduce the amount of losses that you have. And if you can do that, the probability of your trading success goes up exponentially.
Absolutely. It's don't get married to a company because it ain't marrying
Absolutely.
you.
Don't fall in love with stock because it's going to disappoint you at some point.
Right. Well, let's wrap it up because I know our time is short today. If you like the video, hit the subscribe button. Thanks to Drew and Mark for coming and joining me today. Check out our Platinum Swing Trading subscription, you can go to the link below to learn more about it. Mark gives you 3 different lists: a watch list, horizon list, and a below 200 list every Sunday. This week it's a little different, but most weeks it's every Sunday. He also comments throughout the week on the different stocks and what they're doing, where he's getting in and where he's getting out. So it's a very informative, but more importantly, educational of how to go about swing trading and making money out of markets. So thank you again. Hit the subscribe button and the like button, and we'll see you next Tuesday.